Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and welcome to a daily analytical report with Alpari. So we finally have Thursday. On Thursday, we are waiting for ECB. We are waiting for the press conference from Mario Draghi. We shouldn't hear anything new. We shouldn't hear a game changer here. But now everybody's wondering about the inflation forecasts because inflation in Eurozone is picking up. So we want to see if European Central Bank will also rise inflation forecasts because that may be the clue for tapering of their stimulus programs. We'll see first we have interest rate decision which should remain unchanged, and after that we do have a press conference. But that's not the most important thing that is happening on the market right now. I would say that hit for Thursday is price of oil, which dropped significantly yesterday and is still dropping today. We had a drop around 5-6%. This drop was fundamentally caused by built-in inventories. Let me show you the chart here. We got a huge rise in stockpiles, as you can see here, and this caused the downswing here. But obviously, a single number about the stockpiles couldn't be so influential. As you can see, we have rising stockpiles recently, and the price was relatively high. So what happened was that rising stockpiles, the data published was just the trigger. Then the downswing gained momentum from the stop loss orders because the price broke from the sideways trend. But I will show you that on the chart when we will start analyzing markets from the technical point of view. So what we do have today is ECB, and I'm waiting for inflation forecast from ECB. What we have also today is a crashing price of oil, and in general crashing price of commodities, which is mostly driven by the stronger American dollar. So gold and silver are giving back almost all their not all, not even 50%, but the drop is very sharp, and silver and gold are giving back their gains from the beginning of the year. On the charts, there's no demand whatsoever, so it looks kind of dangerous for bulls on silver and gold, but we'll see how long will it last. Crashing prices of commodities are dragging also indexes lower, but the condition of indexes is relatively stable. But weaker commodities are dragging commodity currencies lower. So Australian dollar is much weaker, ruble and Mexican peso is weaker, and all those commodities currencies. Apart from that, not much that is happening on the market. This oil story is covering everything, and anticipation for ECB is also on the first pages of the financial boards and financial portals. So let me show you also the calendar. As you can see, 40 minutes we will have interest rate decision, and hour and 25 minutes we have a press conference. And that would be it for today. And tomorrow, obviously, non-farm payrolls, so very important data for everyone, but chances for rate hike in March are still around 100%, so there should be no surprise here. We are waiting. Well, it's one of the reasons why American dollar is so strong. It's because of the fact that the chances for a rate hike in March are around 100% at the moment. Okay, we can now look on the charts, and here is this drop from yesterday. As you can see here, initially triggered by the bigger inventories, huge drop. Here it was also driven by stop loss orders activation. Why is that? Because as you can see, we do have this side trend. It's a long ways sideways trend. There is a pennant formation, and we broke the lower line of the pennant. We broke 23.6, and we broke from this quite boring sideways trend which was with us for the last 3 months. So all those well, not all, but a significant number of all those traders who were buying here, they probably had stop loss orders below that black line, and activation of those stop losses gave momentum for a further downswing. So we had a downswing. First stop was on 38.2 Fibonacci level, which was also horizontal support from here from the beginning of December, and there was a breakout as well. So here also we had stop loss orders. Now you can see that the price is trying to retrace, which actually won't be anything surprising. After such a strong upswing, there should be kind of a retracement here. So I'm, in my opinion, going short right now is a little bit too risky, and it's a little bit too late for going short. So now I'm seeing here a nice occasion, well, not occasion, but a chance for a reversal. So I wouldn't enter this market with a long position, with a short position here. The price is too low. I would rather wait for a correction, maybe to this, to 38.2, or maybe even to 23.6. But the most important thing, which is here, is that sell signal is on, right? We have negative sentiment on oil, and now OPEC countries will struggle. Maybe they will give kind of a verbal intervention. They will try to lift the price of oil higher, but we will see how it will end. As you can see, well, that's how it explained that lower price of oil is affecting also indexes. Well, it's explanation as any, but that was the case, I think, at the beginning of 2016. As far as I remember, there was a very huge correlation between oil and stocks. When oil was going higher, stocks were going higher. When oil was going lower, stocks were going lower. That correlation broke recently. That was the case in the first few months of 2017. And now we have one day when everybody's talking that crash on oil drags price of stocks lower. Okay, fair enough. For me, it's explanation as good as any. What I'm seeing here is price still in an uptrend. Why is that? Because we are above uptrend line. We are above a horizontal support highlighted with this area, maybe with orange color. As long as we stay above the orange color, the sentiment is positive, but if we will be able to break this horizontal support, that should trigger short-term, mid-term sell signal on DAX with a possible movement here. It's not far. It could be here. But for this kind of movement, we would have to wait a little bit more. Okay, so that's the situation on DAX, that's the situation on Brent. Also, maybe let me check, for example, S&P 500, if there is something interesting. So on S&P 500, what do we have here is an upswing. Price is challenging 23.6 Fibo right now. Whereas the closest support Fibo shouldn't be so relevant here, but price S&P 500 is also testing the local horizontal support here. It's not very often that we do have a reversal with a single top like that. It usually requires like a double top formation or a head and shoulder formation. With this, I don't see many retracements like that. I see the other way. That's why it's called V-shaped retracement, because it's happening mostly after downswing and it starts an upswing. But the other way, it's not so common, to be honest with you. So here the chances, Americans are crazy. You know that, you saw how they recovered from many bad situations. So still the higher chances are for an upswing. But breaking this level that we are currently on can lead to a downswing here, which will be very similar to this one, to the situation seen on DAX. Let me move this tab to the front that I have indexes together. Okay, now we can log into the other account and I can show you the currencies. We start with Euro to Australian dollar, which we like very much, especially that the price is going exactly to the situation highlighted by us. Let me remind you: invest head and shoulder formation, breakout of a neckline, breakout of a trend line, upswing, correction. We said that there are higher chances. We said that 2 days ago. It happened yesterday that there are higher chances of the upswing here because the price bounced from the trend line and from the horizontal support, and we had a beautiful upswing. The price broke the horizontal resistance and now is advancing higher, and we reached an important resistance. Why is it important? Because it was a support in November, in December. It was also a support in January, and it was broken in February, and now it will be the first time that they test this support as a resistance, and there is a price action. There is a retracement here. As you can see, the price went there, created long heads, and is now retracing. So that creates a possible good term buying opportunity here for a downswing and then an upswing trend. Trend in the long term is still negative, no doubts about that, because the price is making lower highs and lower lows, as you can see, and we are below the resistance. But so this creates an opportunity for long-term sellers, but also for short-term sellers. Okay, buy signal you have only in the midterm. But still it's not a good place to buy because we're below resistance. The good place to buy should be after the breakout of the resistance or either after the bounce from the support. We don't have any of that, so that is why buyers should just wait, right? Because currently it looks like a great opportunity to take profits, and it's just a situation when most of the traders are taking profits and short-term traders are going against the recent trend. As you can see, there was a resistance where we can see a significant action. On the other hand, you have a resistance, in this case support, which was potentially very strong, but you don't have any reaction whatsoever, right? This is silver. And we had a bullish reaction on a trend line, right? The price touched the trend line and then retraced. Then we had a breakout. And then price went to the horizontal support. As you can see, it was support here, resistance, resistance, resistance. After breakout, it was a support. So in the same time, it's a neckline of this inverse head and shoulder formation. And also it's 38.2 Fibonacci level. So all that together we highlighted with orange color as a potential good place for a retracement. But there was no reaction whatsoever. So the price crashed this area and is now going lower. This is perfect for education about price action trading, that price action trader waits for the price action to tell him what the price wants to do. If the price action trader do not see possible retracement with a bullish reaction, with a bounce, price action trader is not trading, is avoiding this instrument. For a price action trader to go long here, you would love to see kind of a bounce here, but there was no bounce, so price action was suggesting us that there will be a breakout, and we do have a breakout, right? Always wait for the price to show you the direction. Do not anticipate where the price will go, but react. In my opinion, that is much better approach in trading. Now, as you can see, it's hard to tell where is the next support. Maybe it will be 50% Fibonacci level, but silver here is not respecting Fibonacci's at all. Why I'm saying that silver is not respecting Fibonacci's is that price didn't bounce from 23.6, didn't even bother to look at 38.2, which is usually very important. So if they don't want to respect 38.2, they shouldn't show any respect to anybody. Okay, so sentiment on silver is bearish. There's no bullish sentiment anymore whatsoever. Lower price of commodities affects Australian dollar, where we also had the price attacking important support. As you can see here, support after the breakout to resistance, resistance again after breakout support. So on the paper, it was a very strong level, 38.2 combined with horizontal support. But as you can see, the price went below that level easily, right? Easily. Now they are retracing, but they still managed to penetrate this level 25 pips, which is pretty significant. If you had the stop loss there, and it would be not very wide, it would be like around 25 pips, it would be triggered. Here I have a trend line, midterm trend line. As long as we stay below this trend line, the sentiment is negative, as simple as that. Sentiment will be back positive once we will be able to break this line. The next potential support is 50% Fibonacci level, well, it would be great right now if we would see something like that. That would be a very technical trading, but for that we need to wait. That's just theoretical part. We need to focus on what's happening right here, right now. And right here, right now, we do not see demand on Australian dollar to American dollar whatsoever. All those instruments are very correlated. So silver with gold, but also gold with Australian dollar to American dollar. So silver with Australian dollar to American dollar as well. Here also price easily crashed 38.2 Fibonacci level, but what is significant is that they didn't use that as a support, but they used that as a resistance. Sentiment with buy sentiment is no longer present here. we're entering the negative territory, so the most possible scenario for silver, for gold is something like that, but I'm telling you that there is a bearish sentiment on gold. Me being a bull on gold, it's hard to tell that, but at the same time I'm a trader, so I'm able to recognize patterns flawlessly without any bias. Even if I'm in general I'm bullish on gold, I won't argue with the situation here, right? It's that's what you should focus on when trading. You shouldn't have a bias. You should trade what it is. You should be neutral to any situation. You shouldn't have a strong view on any instrument, because once, for example, I would be very bullish on gold, and I would be a beginner trader. I wouldn't have a trading psychology, a trader's mind. So if I would be strongly bullish here, I would ignore all the sell signals on gold. But as long as you want to be a professional, you have to be open-minded. So, and when you're open-minded, it gives you an opportunity to see, to be objective and see signals from both sides, right? That's what I'm trying to teach you. That's what I'm trying to show you. Euro to Japanese yen, here we are also bullish. Once the price broke this inverse head and shoulder formation and this upper line of the wedge and the price advancing higher, we met a local horizontal resistance, which is now under the pressure, and buyers are trying to force it. Obviously this Fibonacci is no longer relevant here. Okay. We had to delete. So we're having a breakout attempt on the Euro to Japanese yen. Obviously this pair will be influenced by Mario Draghi. Euro dollar, we said that the price shouldn't break horizontal resistance here and support here before ECB. They were not even bothered, they didn't even try. We are exactly in the middle of this sideways trend, and we're waiting for a trigger, for a movement. Upswing here can create an inverse head and shoulder formation and a possible movement here. Breakout of the lower line will deny all that flag and inverse head and shoulder formation and can send price here. So again, you're a trader, you should be open-minded, you should be ready for both actions that soon, most probably, will take place. American dollar to Mexican peso, we are telling you that this rectangle promotes a trend continuation, but weak commodities are not very good for Mexican peso, so Mexican peso is losing at the moment, so we do have a combination of a stronger dollar and a weaker peso due to the fact that peso is commodity currency. But as long as we stay not only below the trend line, but below the orange resistance, the sentiment is negative. New Zealand dollar to Japanese yen, here, beautiful downswing. 130 pips after the breakout of this neckline. Sentiment is negative, but I wouldn't sell now. I would wait for the correction to happen. So we're just waiting for the correction to happen. Maybe this kind of movement here to horizontal resistance and to the trend line would be very, very welcomed here, with a possible further downswing. Canadian dollar to Japanese yen. Finally, we're gonna test the horizontal support here. If we will have a breakout, that will trigger long-term sell signal on Canadian dollar to Swiss franc. Unfortunately, that would have negative swaps. But still maybe a risk worth taking. Canadian dollar to Japanese yen. Unfortunately, Canadian dollar doesn't not want to go higher. I was thinking that they will try to use this false breakout pattern here, but the price is not advancing higher, so there is no buy signal here. New Zealand dollar to American dollar crashing heavily. That's a very, very strong drop. How big is this drop? This drop is 320 pips. It's enormous, right? It would be very nice to catch this kind of movement. The most probable scenario is the price bouncing here, creating kind of a correction here, and what will happen after that we will see. Euro to British pound are on the very good way to break the resistance of the symmetric triangle formation. Breakout here can trigger a new bullish wave. American dollar to Canadian dollar very close to the horizontal resistance. Most probably they will get there, and we will see. If you will see here a candlestick reversal pattern or a price or a technical formation, reversal formation, head and shoulder, double bottom, double top, etc., that would create a nice selling opportunity here. American dollar to Japanese yen is getting to a place where one can think about buying. Once we will have a price closing above those levels. As I'm showing you those levels, it's not about shadows, it's about you have to wait for the candle to be closed here to avoid false breakouts. Once we will be able to price closing here, candlestick closing here, that would trigger a buy signal with a potential upswing. With a potential upswing of 350 pips. So, in my opinion, risk worth taking. Australian dollar to Swiss franc, instead of having two the same corrections, highlighted with this color, what we are having here is is a head and shoulder formation here, right? So there is a left shoulder, head and right shoulder. The price broke the midterm trend line, broke the midterm horizontal support, and broke the neckline. What is not very good is that they are now trying to get back, but it's just a normal retracement. And here, if you will see, for example, a long head or a price pattern, that will be a nice place for a reversal. Australian dollar to New Zealand dollar, we had a breakout of the neckline. It looks promising. It looks like the price will get there in the next few weeks, because it will take time, obviously, weeks or months, but everything is going good on this chart. And the last instrument I have for you is American dollar to Polish zloty. They are struggling to get below 4 zlotys for $1, but the technical situation looks so nice. There was a downswing, correction stopped below 38.2. From the technical point of view, it looks really, really promising, but unfortunately fundamentals are not supporting this view. Much stronger dollar, much weaker emerging markets currencies. Even that Polish zloty is not a commodity currency. We are suffering because most of the emerging markets currencies are commodities currencies. That is why when those are losing, Polish zloty is losing as well. So as you can see, we have a few nice trading setups. Remember that in 15 minutes we will have an interest rate decision, and after that we will have a press conference from ECB. What we are having now here is this retracement that we are talking about. That it's a nice place to go down. Gold is now. They try to stop this downswing. We can see that we try to correct a little bit of those movements seen in the morning. but I hope you got the idea of the market, what's going on the market right now, and you will be able to benefit from that. Thanks very much for watching Daily Analytical Report. Thanks, guys, that you are with us. Obviously, when you're watching our videos, you see that it has sense, and that most of the situations that we are anticipating, that it's happening. So I hope you like our videos. Thanks very much for watching, and now we'll have a short break, and after that webinar about technical analysis. Thanks very much and goodbye.